It's good to have you here. So put this in
Thank you.
perspective. We're focused so much on this Nvidia report after the bell. As a strategist here, obviously you're positioning for the longer term. How are you looking at results potentially from tonight and what that means for your strategy going forward?
Well, I think it's a very short-term story right now. Clearly, it's just going to happen today. And I think once the excitement of the expectations of what will happen, I think we'll find that the market settles down a bit. This is obviously viewed as a big deal, but overall, there's more going on in this economy than just Nvidia or artificial intelligence. The reality is that the economy's proven to be remarkably resilient. It continues to grow at a good pace. Inflation's come down despite the fact that the unemployment rate remains below 4%. So it's been a great economy, and the stock market reflects that. And I don't think the AI story is the entire story here.
I mean, the high on the street for Nvidia and the price target is $1,200 here. So, I mean, it says a little bit more than perhaps a short-term story. But from your perspective, where is that long-term story that investors perhaps should be paying attention a little bit more here within the generative AI landscape?
Well, I think the AI is one of the technologies out there that are going to do a great job of increasing productivity in our country. We've got a significant labor shortage. I think that's the big problem we have in the economy. And one of the ways that we can solve that labor shortage is to see companies investing in technology and machinery and so on, and onshoring with state-of-the-art manufacturing facilities. All that is likely to push productivity growth higher. We already had a really good year last year for productivity growth. It accounted for a good amount of our real GDP growth. And I think that's going to continue to be the case. So I think the big story is productivity is going to grow. Technology is going to enable that. It's not just AI. And in that scenario, I see the stock market continuing to go higher, even if AI turns out to be somewhat disappointing in terms of relative to expectations, because the expectations are awfully high right now.
And let's talk a little bit more about your expectations, not only through year end. We also talked about your target, S&P target by the end of 2026, getting all the way to 6,500, I believe. In terms of those catalysts here, you mentioned productivity, that's improving. What else do you see in terms of leading the market higher over the next 2 years?
Well, I think it's fairly clear right now, anyways, that the U.S. economy is doing a lot better than most other economies. China's economy is likely to remain depressed for the next few years. We have a precedent of property bubbles in Japan, property bubbles in the United States. Property bubbles take 5 to 7 years before you really come out of the depressing impact that they have on your economy. So China looks like it's going to be depressed, but the good news for us is that means they will continue to export deflation, which will keep our inflation rate down, at least on the good side. We have Europe in a shallow recession, and it's got some structural problems. Germany's deindustrializing because of competition from China. You've got India looking pretty good. The stock market's very, very elevated there, of course. But put it all together, and it looks like the U.S. is going to continue to be a outstanding market, literally outstanding, standing out from everybody else. And I think that's a big part of the story for me, and why I think the market can continue to move higher.
Are U.S. companies, from your purview here, are they well insulated enough then from some of the slowdown that you were mentioning that investors have to also keep tabs on internationally, and especially, as you noted, within China?
Yeah, that's a good point. I mean, the good news for us in terms of a slower global economy is it keeps commodity prices down, it keeps the price of oil down, it keeps inflation down. The bad news is that for our exports, the markets aren't going to grow as rapidly. But I think the U.S. economy is showing enough strength that the domestic economy will provide some offset to weakness in the global economy. And it's not as though the global economy is not going to grow. It's going to grow. And maybe the areas of growth like India, maybe Brazil, Indonesia, some other emerging economies will show more growth while China kind of stalls out here for a while.
Yeah, that's certainly going to be interesting to see how it plays out, especially if we think about companies like Nike, companies like Starbucks, Apple even. We're going to keep close tabs on that kind of greater China and Asia Pacific build out that they have as well. Ed, we got to leave things there on the day. We got to have you back and continue this conversation for sure here. Ed Yardeni, thanks so much for joining us.
Thank you.